and welcome back to another video from the We Are Investing channel, a channel that is dedicated in investing and personal finance. On today's video, we are going to go over 3 stocks that I think that you should at least add to your watch list and possibly even buy, but you got to do your own due diligence. I'm not telling you what to do here, but these are stocks that I have investments in. These are stocks that I think are going to continue to go up, and I think they're going to be good plays. So with that being said, before we dive into these 3 stocks, please consider hitting that subscribe button, ringing that bell, and smashing that like button. Turn that baby blue. Now, the first stock that we're going to be talking about is AEI. Now, I posted on the Patreon a couple days ago before the stock started to go berserk. People were able to get in at a great price and they made a killing today because the stock today had a great day. And I posted before this current run up. And I think that this stock is going to continue to run. Now, I did a video on this stock solely where I go into more detail about the company, about the potential, about why I think the stock can really fly in the next couple of days. So if you want to learn more about this company, more about that stock, I highly recommend you give that video a try. I'm going to post a link to that video down below in the video description. Now, the position that we opened today is up already 37.37% for a total gains of $4,260 in one day alone. And that's because this stock today went up 56.61%. Over the last 5 days, it is up 147.39%. The current share price is $27.50. Now, the reason why I think that this stock can continue to run up is because how low the float really is. The float is 770,000 shares. The shares outstanding is 9 million. The float is extremely small considering the shares outstanding and the share price. That puts a market cap for the free float at $21.18 million. Now, this stock has had some great movements over the last couple trading days and is starting to get on people's radar. And the more radars it gets on with this a low float, that is a recipe for this stock to go absolutely berserk. Also throw into the fact that this company deals with providing properties that are going to be including solar panels on the roofs, solar farms for the complete development, and also whenever you buy a home from this developer, you're also given a free Tesla, which will then also be used in the future for robo-taxis to help create a sustainable living. That is the mission for this company, to develop developments that are tailored towards sustainable living with solar energy, electric vehicles, and gardening, and some other stuff as well. That is their mission. That is what the company is trying to achieve. And I think a lot of investors can align their self-interest with that kind of mission statement and get behind on this stock and invest in the company. And that's all going to result in a higher share price if the stock and the momentum can continue to go up. Now, the next stock that we're going to be talking about on this video is Fubo TV. I'm probably going to mess up and I'm going to call it Fubu. I'm sorry for doing that. But Fubo TV is a stock that we entered in. I posted on the Patreon on January 25th that I bought 100 shares of Fubo TV at $40 a share. And I'm doing a covered call strategy with this trade. I am selling a call option at $7 for the May 21st $70 strike price. So, all in here, I'm at $4,000, and also I got $700 up front for these covered calls. But I will have to get rid of my Fubo shares if they are over $70 come May 21st. If they are not over $70, I won't have to get rid of these shares. But if the stock is at $90, I'm going to have to sell 100 of them at $70. So my upside is limited here to $70. But buying the stock at $40, that is still tremendous upside. And the hedge that I get for selling these covered calls at $70 a premium, so $700 upfront in my pocket right now that I am deploying into other trades, I thought it was well worth it. Now, this stock is currently trading at $43.28. Today, it dropped 7.24% and is starting to recover in after hours trading. I am hearing a lot of buzz when it comes to Fubo TV on social media, and I think there's a lot of traders getting into this stock. It has a high enough short interest that people are trying to get the shorts out of Fubo TV. Also, it has potential with the gambling sector, with sports betting particularly. They are thinking about adding sports betting to their platform, and that would align very well with the company because Fubo TV is a program that is focused on sports. So throw in sports betting into that user face, into that package, and that is going to really drive investors into the stock, and it's going to create a better product, and hopefully that will lead to a nice return on investment as well. Now, my covered calls are at $70, and that would be a new high. That spike that you see right now on that chart is around $62 a share, and I think that we are going to start to test those within the next month. So I think the stock is going to start to rally. It might break $70 a share, and maybe my covered call strategy isn't the best strategy to place here. But because of the volatility and because of that short interest, I don't know if these shorts are going to really pile into Fubo TV. So I did go with the covered call strategy to protect myself a little bit and give myself a little hedge on this trade. Now, we also had news on Fubo TV that investors are adding to their stake or opening up a position in Fubo TV. Today, we had news that Comcast takes 9.3% stake in Fubo TV. That is great news for this company, and we're also seeing other investors pile into this stock as well because the macroeconomics make sense. People are cutting the cord, and Fubo TV makes sense personally. Like, all the other stocks in this sector are absolutely booming. Netflix, Disney Plus, those have all gone up a ton, but Fubo TV still has room to run in my personal opinion. All right, the last stock that I want to talk about on this video is TGIFF. Now, you cannot invest or trade this stock through Robinhood or Webull or Cash App. You need a different brokerage. You need access to OTCs. And if you've been following this channel, you know that we cover a lot of OTC stocks because they're absolutely taking off. This is a stock picker's market. There are a lot of sectors that are going to boom, and there are a lot of companies, small companies, that really can grow in value because of this change in the society, because of the change in the way that we are going to be conducting business. These small companies that are traded on the OTCs in this market, in this climate, provide a great opportunity to investors who do their due diligence and are able to find diamonds in the rough. There are a lot of companies that I think are going to come out of the OTCs very strong because of the climate that we are in. And TGIFF is one of them. We opened up a position on February 8th. We bought 15,000 shares at a price of $0.0983. Now, I did a in-detail video on this stock, on this company not too long ago, and the stock has been performing relatively well. Pretty good returns if you ask me. The stock today went up 12.60%, and it is moving, but this is a long-term hold, at least it is for me. Now, this company is in the cannabis sector, and the CEO, one of the reasons why I'm invested in 1933 Industries, is the co-founder of the Cronos Group. And also, these products that 1933 Industries makes, they have a factory in Las Vegas, Nevada, where they produce marijuana and other products. They sell those products in one of the most popular dispensaries in the world, at least in the United States, Planet 13 in Las Vegas, Nevada. It's one of their better products that they offer. And this company is growing revenue, and the CEO, Paul Rosen, the co-founder of Cronos Group, is now leading this company. They are reducing their cash burn. They are really improving their balance sheet, and they are focused on profitability. All of those things excite me as an investor, and I really do believe in the management. Now, if you look at the market cap for TGIFF, you can see that it is 32.92 million US dollars. But if you look at his other company, the one that he founded, Cronos Group, you can see that the market cap for that marijuana stock is $4.70 billion. That just goes to show the potential upside with TGIFF if Paul Rosen can do it again with a different company. And I think that he can really grow 1933 Industries. If he gets this company to $4 billion, that is going to be a massive return on your investment. People are going to be filthy rich if they invest in 1933 Industries. hold it, and this company gets a market cap of $7 billion without a crazy amount of share dilution. So that wraps it up for the 3 stocks for this video. If you like this video and the content that I am providing, please consider hitting that subscribe button, ringing that bell, and smashing that like button. Do not forget that there is a Patreon for this channel where you get access to follow the portfolio in real time. Whenever I open or close a position, I post on the Patreon. You also get access to a Discord server of over 400 members, and you also get early access to videos I upload to the Patreon before I make the videos public on YouTube. Provided down in the video description below are also links to a Facebook group, a Twitter page where I am active now, and promotional links to Webull where you can get 2 free stocks worth up to $1,600. But you know the deal. It's been real. It's been fun. It's been real fun. And this is We Are Investing, and together we are invincible. See ya!